Hey everyone, welcome back to Pheno Lab. Today, we're diving into one of the hottest topics in the financial markets right now, gold prices. As the US election results start rolling in, gold has taken an interesting turn, and we'll be breaking down what's driving these fluctuations, key price levels to watch, and where gold might be headed in the coming weeks. So grab a coffee, hit the subscribe button, and let's get started. Segment 1. The current market situation. Gold prices have been on a roller coaster lately. With the current price hovering around $2,740 per ounce, we've seen some movement in reaction to the early US election exit polls. Now, usually gold is seen as a safe haven, but in the last few days it's actually struggled to hold its ground. So why is this happening? The big factors are the rising US dollar and bond yields. Both of these have increased in anticipation of a possible Republican win, which, according to market sentiment, could bring stronger policies on immigration, taxes, and inflation. And when bond yields rise, non-yielding assets like gold tend to get hit. Segment 2. Key technical levels for gold prices. Let's jump into the charts for a moment. Gold has been struggling to hold above a key demand zone around $2,730. Now this is an important level to watch because it's a psychological support line for many traders. Currently, we're watching for two key levels: $2,746, which aligns with the 23.6% Fibonacci retracement level, and $2,718, the 38.2% retracement level, which also coincides with the 21-day simple moving average. If gold drops below $2,718, we could see a sharper decline to around $2,695 or even $2,673. But on the flip side, if buyers manage to push it back up to $2,746 and beyond, it could indicate renewed bullish momentum. Segment 3. Election influence and market sentiment. The US election results have a big role here. Recent polls show a potential win for Trump, which has boosted the US dollar and bond yields. Investors believe that a Trump victory might lead to policies that drive up inflation and yields, which isn't great for gold in the short term. But remember, gold often benefits in times of uncertainty, especially in the longer term. A Trump victory could bring tensions in global trade, especially with China, which might make gold a more appealing investment down the road. Now, let's not forget the Federal Reserve's upcoming policy meeting. Right now, the market is expecting a 25 basis points rate cut. If that happens, it could add more fuel to the gold rally, especially if the Fed hints at more cuts in the future. So the Fed meeting will be pivotal. It could either boost the dollar further, putting more pressure on gold, or if they announce a dovish stance, it could lift gold prices in anticipation of lower future yields. There's a lot going on in terms of market sentiment. Let's break down some bullish and bearish themes. On the bullish side, rising inflation expectations, fear of stagflation, and potential economic slowdowns could all drive gold prices up. On the bearish side, however, the strong dollar, rising bond yields, and upcoming seasonal weaknesses might keep pressure on gold prices. Many analysts believe that while we're seeing these bearish pressures now, there's still a long-term case for gold, especially as central banks around the world continue to struggle with inflation and potential recessions. To summarize, gold is at a crucial juncture. In the short term, we'll be watching $2,730 as a critical support level and $2,746 as a key resistance. The outcome of the US election, as well as the Federal Reserve's policy decisions, will play major roles in the direction of gold prices. But if you're a long-term gold investor, remember that these dips could present buying opportunities, especially if inflation expectations remain high. So, keep an eye on the news, stay informed, and trade wisely. That's all for today's update on the gold market. If you found this analysis helpful, don't forget to like, share, and subscribe for more insights. Let us know in the comments if you're bullish or bearish on gold. Your thoughts are always welcome. Thanks for watching, and we'll see you in the next one.